So this is a time where everybody's excited and talking about bonds all the time. So can you tell me about the disconnect between the Fed expectations for rate hikes and what the market is seeing, and what happens when one is right and the other's wrong?
Sure, I'd be happy to. So they're actually connected for 2017. Both are assuming one more hike in December. And if you look at Fed funds futures, it's about a 90% chance. So I think the markets and the Fed are in agreement for this year. However, next year, the Fed's expecting another 3 hikes. And of course, they're assuming QE unwind as well. So a lot going on with the Fed. The market, on the other hand, is only expecting 1 or 2 hikes. So again, much more benign in terms of rate hikes. My view is that there's a synchronous global recovery going on, and along with that, some inflationary pressures building. So I think I'm leaning a little closer to the Fed than the market today.
And what happens if the Fed does all 3 and the market is still expecting 1 to 2?
Clearly, there'll be more pressure on rates. I think more pressure on front-end rates, so 1 to 5 year treasuries. But clearly, there'll be pressure across the curve as well. So it'll be not great for the fixed income markets, but I think we also would love to have overall short-term rates normalized. And I think that's just a question of getting there probably a little bit sooner than the market expected.
You're expecting all 3 of the Fed rate hikes. Is that because you expect inflation to see more inflation?
My expectation is for higher inflation in 2018. I'm still a strong believer in the Phillips curve. And that means that as unemployment continues to fall, there should be more pressure on wages. Wages remain very, very low. A lot of that, folks would argue it's because of all the global disruptive technologies out there today, but I think there'll be more wage pressures next year, and I think that will help inflation go a little bit higher.
So you expect to see the wage inflation that we've all been waiting for that hasn't come?
I think as we get sub 4% on unemployment, that's quite probable in my mind. At the same time, if you remember, we had a material drop in telecommunications prices and also medical prices at the beginning of last year, and those roll out of CPI. So those will also add to pressure on inflation.